Before we talk about uranium and agriculture and gold and silver and everything else, we're going to talk about bonds, because on this channel, we understand how important the bond market is, because the bond market is the debt market, and the debt market is collapsing. And when your economy is a debt-based system, then the debt market, it turns out it's pretty important to watch, right? So as the bond market collapses, we have been talking about this for weeks. We have been talking about approaching this 41-year trend, which we are now on the cusp of touching, right? On the cusp. So what happens when we touch it? Well, that's the whole thing. That's what we got to wait and see, right? Because if we break this, if we go higher, listen, let me tell you something. They're already telling you what's going to happen. If stocks don't fall, the Fed needs to force them. Tightening financial conditions will be key to getting inflation under control. So look, they need asset prices to fall. Okay, and how do you do that? Well, you got to raise interest rates. And so if you're unfamiliar with the Fed up to this point, then you're way far behind, all right? Not only did the Fed end quantitative easing, which was a bond and mortgage-backed security purchasing program, now they're doing quantitative tightening, okay? Quantitative tightening is when they sell all the bonds and mortgage-backed securities that they've been buying. Okay, so this started rolling over because of that, you understand? And now it's about to roll over even more. So why would this not break? Why would this not break? Do you understand? The only way this doesn't break is if something, beyond just a black swan happens that makes them say, okay, we're not doing that. We're doing QE5 right now. You understand? This is going to break. I'm calling it right now. It's going to break. And when it does, markets are going to collapse. So with that being said, how does that impact gold, silver, and all of our commodity stocks that we love so much and that we really focus on this channel? Well, long term, it's very bullish. Okay, long term, it's very, very bullish. But short term, if you have a liquidity crisis in the markets, right, and especially in the broader indices, then look, it's going to be bad news bears, okay, because everything's going to sell off. It's just like in my last video. We talked about how when everything's red, it doesn't matter if it's the NASDAQ, it doesn't matter if it's Tesla, it doesn't matter if it's gold stocks, silver stocks, uranium stocks, it doesn't matter what it is, everything's red. Okay, when you get days like that, okay, that's fear, all right? That's uncertainty in the market, that's panic selling, and that's potentially liquidation, okay? Because maybe trader A, he doesn't want to sell all his gold stocks, but he's so over leveraged and whatever's getting destroyed that he has no choice but to sell those gold stocks to come up with the liquidity to pay his margin calls. You understand? So that's the kind of systemic collapse that could potentially happen. But that's why it's so nice to have cash, because you can take advantage of those situations. Because if you're in commodities and you're in all the things we've been talking about, then long term you are golden goose, baby. You're going to be all right. Okay, but you have to understand that these kind of short term events could happen. So in the event that something like this does happen, it's all about being mentally prepared. So when it does happen, when it does roll over, you say, okay, everything's going according to plan, right? We knew this was coming. We're not shocked. We're not getting scared out of our position. We're not freaking out. We are aware of the situation in advance, okay? And that gives you a strategic advantage to hold your position. And more importantly, B, have cash ready to buy. Buy where? Buy on levels that you foresaw being strong levels to buy at before they happen. So when the price gets there, you're already ready to strike. So that's the backdrop, right? The bond market is the backdrop. And knowing that's the backdrop, we know how to keep tabs on it, see how it develops. So first of all, we'll watch the rates themselves. We'll see how the 2s and the 10s and the 30s all play out. Do they keep going up? And if so, do they touch and do they break these long-term trends, okay? This is key. Because if we get a break on that, I'm telling you, you're just going to need to clench your cheeks, all right, and get ready for a wild ride, because anything could happen in the market at that point, all right? So I don't care how bullish uranium is. I don't care how bullish gold and silver are, all these things, okay? Nothing is immune to a liquidity crisis. That's why I just keep trying to plant this seed in your head just to be prepared, so that if it does happen, you knew in advance and that you can ride it out, right? Because it might not happen. The world may be unicorns and sunshine forever and always from this moment on, right? But in case that happens, I just want you to know about it. So what's going on in uranium? Energy fuels. We talked about the Wyckoff, right? We predicted this pattern playing out. At least we set it up, all right? So is it playing out? Well, technically on uranium fuels, it is, okay? We have not invalidated the pattern yet because we have not broken that fifth shoulder. Okay, we are still below it. We had a big move up on pretty big volume, got to admit, but no follow through. Okay, no follow through. So could it still decline? Sure, it could, but it's definitely threatening. The key problem with the energy fuels chart is that it's still indecisive, right? There's still no clarity. If you would have had a nice follow-up today or a big sell-off day today, it would have given us a much better answer. But it didn't do that, so unfortunately we have to keep watching. But it gets interesting from here, because if you look at Nexgen did break. And Nexgen broke on, let's look, historically massive volume. Okay, we're talking like in the top 5, 6, 7 volume days of all time. So this was major. It tells a completely different story than energy fuels does, all right? Because you broke up, you got the close above $6, you got the close above this obvious resistance right here, and you invalidated the fifth shoulder. So if I were looking at Nexgen, I would say, yeah, there's no Wyckoff playing out here anymore. We're going up. And since we're here, we're going to talk about it. If you want to play this, you would pretty much set up your resistance right here. Call it $6, okay? Because you very well may, if you're lucky, come down to get the test around, high 5s, low 6 before you turn around and go up again. It's something I would be mindful of. So just in case you were waiting for some kind of break before you added or made an entry, just be mentally prepared that if you were to buy right here today, you might still come back and retest this level before either trading up or sideways for a while, whatever the case. That's a huge level to get up above after all those tests. It would not surprise me at all to see it retested. It tried to today. It's pretty bullish. That is a better candle, but not as much volume. All right, so we need to keep watching it. Let's go on to URA. Again, it's kind of telling a similar story. Let's see, that's here. So we did invalidate the fifth shoulder, and we kind of look the same as we do in Nexgen here. I'm guessing, for me, I'm not getting enough clarity, okay? I'm just not. This tells a bigger story to me than anything. It's the URNM chart, and it doesn't even have to do with Wyckoff. It has more to do with this breakout, all right? Because this was clearly a resistance level that was tested, denied, and then it came back up on big volume, and then it stayed up again the next day. But just like everything else, because it was such a big level, you would actually hope to see, the more bullish you are, the more you want to see it. You would actually hope to see it come back and test this one time before taking off. That's always really nice. And it's a great entry spot too. But nonetheless, URNM looks better than any of the others, okay? And in part, this is kind of telling me that Wyckoff will be invalidated. Now, this is why we trade the way we do, and this is probably a really good learning opportunity. So in case you're thinking to yourself, well, man, we missed out. Well, no, we didn't. Because look, we made it right here, okay? This is where we talked about Wyckoff. Oh, right here, excuse me. And then we came all the way down here the next day, all right? So if you just trade from where we talked about it, if you buy now, you're only missed out on less than 4%, okay? So the risk to reward was worth the trade, okay? Waiting to see if it panned out. Because let's say you bought here and it didn't go up. Let's say it went all the way down here. Well, then that 4% cost you 23%, you understand? So it's not always about getting, min-maxing your gains and getting every single percent down on the bottom you can. It's protecting yourself from losses, okay? Because I would take any day of the week waiting for this to break down, all right? And buying down here, I would rather have that opportunity than to buy, here and have it roll over on me, okay? Whereas if it breaks up, I can simply chase it with the volume like we have here, right? So this is a good example of if it doesn't break down and it does break up instead, and we talk about that all the time, you can chase it because it has the volume. It's a signal that it's bullish. It's going up, right? You got over that major resistance with volume. So that is a really bullish thing to see. I think if it weren't for the bond market, I'd be all over this, honestly. I mean, this looks so good. I mean, uranium looks amazing, guys. It really, really does. The only thing holding me back is this damn bond market, because I know once we get up here, it's going to get really, really, really shaky. So should you play every single trade in your entire account based on what may or may not happen in the bond market? Well, maybe. I think that you should at least have it in mind, considering how fast we're getting there. It's not going to take long to figure it out, right? So there's no reason to FOMO anything. I think what you do from here greatly depends on where you are already. Okay, so for me, I'm already 90% invested. All right, I own so much gold and silver and uranium that if this thing goes up, I don't need to be afraid of missing it because I'm already in, right? I've been in for a long time. And the 10% cash that I have, it's like, so what? You know, I don't need to min-max. That cash is more valuable to me if we drop than it is just to get a little bit of extra money in there for the next leg up. Does that make sense? So it's all about measuring your risk and your reward. So depending on where you are in this market will greatly dictate what's best for you to do. So my advice would be is if you're not in uranium at all and you want to get exposure, then you need to start here with Sprott Physical. This is the safest play. It's got the most upside. I mean, look, you want me to prove it to you? We're going to start talking about ratios today. Since November 2021, it has been better to own Sprott Physical Uranium than it has been to own the miners. And it's consistent across the board. So what you're looking at here is the ratio of Sprott, the over-the-counter, so it puts it in US dollars, right? It's been better to own this is the Sprott Physical divided by Cameco. So it takes, basically a half of a Cameco share to buy one Sprott share. And that number is going up and up and up. It takes more and more and more and more Cameco to buy Sprott, right? Because Sprott is outperforming Cameco. It's also outperforming Energy Fuels. It's also outperforming Nexgen. Okay, are you starting to notice a trend here? DNN outperforming substantially. All right, URA outperforming substantially. So if you want to get an entry and you don't have anything, like I said, that's where you start. You start right here. Okay, you start with Sprott. And I think they probably closed at a bit of a discount today. So today is a good time to buy. I think timing Sprott is a bit more difficult. I don't think you really try to time Sprott as much as you do the others. I think if you want in, you go ahead and get in. You can go ahead and take a 25, 50% position. And you can see how it pans out going forward. You can save some cash to strike on a sell-off. But I would at least be positioned. If you own nothing, you probably need to be at least 50% positioned in whatever it is you want to be in. Okay? And just keep in mind that, if you missed, quote unquote, this, you only missed it by 4%. It's nothing. It's nothing, right? And you saved yourself all of the risk of this downside. So could this still play out? Yeah, I guess. It is kind of giving us mixed signals. But truthfully, it is probably being actively invalidated at this time. And I think if we do get a sell-off, it'll be because of the bond market and a mass broad market sell-off. Uranium is too bullish to sell off on its own. And I think that's what I'm seeing, honestly. I'm seeing the mixed signals because what we're looking at is the fear. I think investors are afraid to get into something so volatile. I mean, think about being a major hedge fund or major investor, getting into something that moves this much every day. It's like being in Bitcoin, I mean, that's crazy volatility on an underlying physical commodity. That's just, unpredictable right now. We've got war and all kinds of crap going on that if you have a lot of money in a sector that's so small. I mean, look, Energy Fuels is only $1.5 billion. You know what I mean? Warren Buffett could buy this entire company and, only move a fraction of his portfolio. It's just insane. So the uranium space is so small that for big money to get in, they're either going to need more stability in prices, right? Or more clarity that prices are certain to rise and, more important, stay risen. Because everybody's talking about uranium going to, $200, $300. And it very well could. It probably will. But is it going to stay there? I doubt it, right? It's probably going to spike up and then collapse just like it did last time. And that's part of why you'll want to own Sprott Physical, because it's going to go with it. I mean, this thing's going to get nuts. I mean, just look at these ratios, right? Not only are they trending up, but the pattern is bullish to remain upwards. So what is going on in the uranium market, right? Something's definitely happening, and it wouldn't surprise me at all to see some kind of crazy market where equities collapse because of some kind of calamity in the bond market, right? It's like we talked about at the beginning of the video. Just think about something like that, right? Everything kinds of sells off. But uranium, physical uranium, wouldn't have any reason to sell off, right? That's a small market anyway. The dynamics are entirely different. It just has no reason to sell off. So neither would Sprott, right? And any selling that occurred would be an immediate known discount to its asset value and would likely get bought right up. It almost makes me wonder if you saw some kind of market-wide sell-off in the bond market or caused by the bond market, that Sprott still goes up. Because the chart's telling us that, that's not changing. I mean, these are all the same chart. And look, after the massive day that happened yesterday, and most of these stocks went up 10%, 15%. Look where it just magically happened to stop, at the 50, at the trend line. Next day, rode up, fell back down. Where? Same place at the trend line. And then Monday, it's going to open up here, right? With room to stay in it. That's what I'm saying, man. You gotta pay attention to these ratios now too. I can't believe I just discovered this, but this is powerful. I mean, Sprott is already my largest uranium holding by a lot. It's substantially larger than all of my others. And I'm starting to feel like that's going to pan out really, really well. Just look at this chart. This is bullish. This is bullish for this ratio. All of them are, right? And you can do it in anything, right? Let's look at some that I don't have here. So I've got Chemical. Okay, how about UEC? Okay. Let's do this. Oops. Okay, so it's telling us the same thing. Start charting. Boom, there it is right there. Uptrend, hit it on the tick. Look, okay. Man, except this one might be putting in a little bit of a head and shoulders. Maybe. It's an ugly head and shoulders, but it's potentious. But it's still the same uptrend nonetheless. Huge, massive volume has stopped on that trend. Let me clean it up, make sure we're right. I mean, yeah, look. You see what I'm talking about? It's just across the board like this, right? Man, guys, next week is going to be very, 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 very exciting in the markets, especially for uranium. I can't wait to see if this trend holds. Especially, what was the one we were just looking at? URA. Notice how it broke above, right? It had a breakout, and look where it came back down. It's almost like it's testing the breakout. So what happens next, guys? Do we get a breakout upwards, or do we fall out and start a new trend, right? When we start rolling the other direction, right? Where the ratio reverses. I think this is super important to watch. It's super fun to watch. It's a lot to keep in mind. I think between the bond market and these ratios, we're about to learn a lot about whatever's cooking in the uranium market. Looking at silver, silver's still doing what it does best, which is kind of teasing you. Look at that right there, right? So on this short-term kind of time frame, look at that. There you go. You're kind of teasing a break. Actually, you know what might be even better than that? It's right here. Something like this. Yep, there you go. Yep, so that's bullish. Flagpole, flag, break up, come back, test this resistance again. Of course, once you get above that, that's when it's time to party, right? That's when it's time to play, which is extra interesting because if you look at something like Endeavor, it's making the same pattern right now. Just saying, that's a bull flag, right? So silver is teasing. Silver is definitely teasing an imminent breakout. Days, weeks, certainly not months. mean, you see the same thing in AG. Whoop, right? You see that one? Look at Hecla. Whoop. Easy. Stuff like GDX has me a little bit worried because if you look at the, first of all, you can see this, can't you? I mean, that's pretty clear. But the thing that worries me on this is look at the price trend, but look at the RSI trend. Okay, so you have divergence here. You have declining RSI on ascending price. You see that? That's bearish short term. I mean, this is a daily time frame. A couple of days worth of trading can correct this RSI, and it could clear it out of this. But it does signify that at least a short-term move to the downside is coming. Therefore, with that being said, it wouldn't surprise me to see this come back and at least test this trend, right? And if we do get a breakout, at least look at that 50. Easy. IPI, Intrepid Potash, looking so good. All right, we bought the breakout, remember that? And then we talked about it running over, getting overheated, buying the steep sell-off. The 50 was always the target. And here we are at the first sell zone. And why is that the first sell zone? Why is that the first price target? Because of here. Clear prior support will now act as resistance. So if you're in, if you've made a lot of money on this trade, my suggestion is to start taking profits. Do you blast off up here? You don't know that. You don't know. But this is a technical level to take at least some profit. How much is up to you? 25%, 50%. At least take something, all right? But don't ride because at minimum, this is exactly where you'd get a bounce, right? You do something like this and maybe make some other kind of consolidated bull pattern before you break up again. Whatever, however that forms, it could be all kinds of things, right? But this is a place where you would expect some short-term sell-off to test this level, take some profit. Occidental, same thing. We talked about buying here on this support, that if you miss the whole run up, then this consolidation would be a buy. And clearly, we are starting to get some upward momentum with increasing volume. I would expect this to essentially continue onward. MP rolling over short term on the daily, likely coming back to retest the breakout zone. You'll see we have a confluence there with the 50. That's probably a strong buy before we come up and hit that first price target. Vital Metals is going great. Remember I let you guys know I bought back here, hoping for the breakout. We got it. We'll come back for the retest. Didn't quite get it all the way back down. I think it might just be because it's too dang bullish. But the volume is declining. It's not something you can necessarily chase right now. But certainly if you could come back and retouch this, it's a buy. I'll probably add some more. But this looks long-term like it's going to be a really, really nice trade. Rare earths, gotta love it. Same thing here, Commerce Resources. Remember I did buy down here on the break. No, I bought it like right at 20. Yeah, I bought it 20. And we never came back to test these moving averages. So cause looking at the volume here, this is a very low cap. I'm not sure that we break this anytime soon. It's still likely you come down and test at least one of these averages at some point. If you miss the ride, I would just be patient. I'm sure we will touch these moving averages and get in long term. I think this is worth a speculation hold. We are starting to get some traction in Arrianne Phosphate. We had a potential breakout happening yesterday. We have since sold and come back to what would be the retest. I'll be very, very interested to see what happens next week. Keep this on your radar, guys. I would now be a strong buyer at the 50. In prior videos, I was hoping to come down and test the 200. But given the kind of direction it's taken, I'm going to be a little bit more bullish in my opportunities to add here. We'll keep an eye out on it. Any big break with any kind of volume, I'm chasing. Nothing's changed about Bitcoin. You still do not want to own this in the medium to long term. Even the short term, it has nowhere to go but down. This is a bear flag. We've talked about it many times. We've also talked about your buy signals, neither of which exist. One of which is the Fed. It's the most important. If they announce quantitative easing number 5, you feel free to buy with prejudice on leverage. It's going to skyrocket. Now they're talking about quantitative tightening. Okay, that's the opposite of good for Bitcoin. All right, you understand? So I love this stuff. I've made a lot of money on it, but I have no, disillusion about it, right? I mean, you don't want to own this stuff in a tightening environment. It's a risk asset, and that's all it is, right? So just understand that it is going to continue going down until the Fed launches QE5 or you get a break of this level, and I don't see it.